Hello and welcome to Tech Circle. You are listening to Tech This Week, where we bring you up to speed with the most important weekly developments in the enterprise and emerging technology space in India. I'm Shweta Sharma, and let's have a look at what made headlines this week. The Tata Group has reportedly acquired a majority stake in online grocery retailer BigBasket. The deal will give Tata Group a 68% stake in the company for $1.3 billion and valuing the unicorn startup at $1.8 billion. In the show, we'll also be joined by some special guests to discuss this in detail. Next up, the Reserve Bank of India has published master guidelines on digital payments. The master direction will provide necessary guidelines for the regulated entities to set up a robust governance structure and implement common minimum standards of security controls for the digital payment products and services. This week, Walmart announced its Q4 earnings. The retail giant reported a 5.5% increase in net sales year-on-year in the fourth quarter of financial year 2020-21 for its international business. The international business, which grew to $34.9 billion, was led by Flipkart and Walmart's businesses in Mexico and Canada. Flipkart's Chief Executive Officer Kalyan Krishnamurthy, in Walmart's annual investor call, said that the company will expand its subscription program Flipkart Plus and strengthen its value proposition in the grocery segment and invest in technology and infrastructure in 2021. As per NASSCOM estimates released earlier this week, the Indian technology sector is set to close the financial year ended March 2021 at $194 billion in aggregate revenue, up 2.3% year-on-year. Unacademy's acquisition spree doesn't seem to take a halt. This week, it acquired Bloom Ventures-backed TapChief for an undisclosed amount. TapChief is a professional networking and consulting platform valued at 100 crore rupees. The deal will offer exit to all of TapChief's existing investors. Talking about the funding deals, consumer lending startup CreditBee raised $75 million in a Series C funding round from a clutch of investors. Cybersecurity startup OneCosmos raised $15.1 million in a Series A round of funding led by Forge Capital, and cross-border neobank Zolve raised $15 million in a seed round led by Axel and Lightspeed. So let's get talking about the big news of the week. Tata Group acquiring a majority stake in BigBasket. The deal is expected to create an exit for BigBasket's largest shareholder Alibaba e-commerce, which held a 16.45% stake in the company for the financial year ending March 31, 2020, and Abraj Group, which held a 15.02% stake during the period. And to get more perspective into the matter, my colleague Payal Ganguly spoke to Rohan Agarwal, director at RedSeer. Let's listen in.
Thank you, Rohan, for agreeing to join us on Tech This Week for the discussion on the possible acquisition of BigBasket by Tata Group. Rohan, couple of questions there in terms of the deal as such. With this move, I think, there seems to be a solid consolidation. We've seen Reliance going deep into the grocery and digital businesses sector with JioMart, etc. And now Tata Group wants to build a super app, starting with the acquisition of BigBasket. So does this mean that, grocery as a space has become a two-horse race, so to speak?
Sure. No, happy to join in and discuss here, Payal. See, I think the e-grocery segment, as we say also in a lot of our perspectives, this has been a very nascent online category. Unlike some of the other categories like fashion, beauty, electronics, e-grocery has hardly any online penetration. Grocery has hardly any online penetration. And we've seen a number of models in India trying to be able to solve this grocery puzzle. We've seen horizontal e-commerce players like Amazon, Flipkart, trying to sell grocery to their existing customer base. We've seen the vertical players focusing on grocery, like that of BigBasket, Grofers, and super vertical players focusing on a particular segment of grocery, for example, Wishes and Fresh to Home focusing on meat, right? And then there's like a range of other models which are either the micro delivery models like that of BigBasket or the on-demand models like that of Swiggy and so, and even the new social commerce models like DealShare, right? So as you can see, there's a lot of competition or experimentation that is going on in this segment. And it is nowhere really a two-player market at all in the near future. In fact, we believe that the grocery segment is so large, right? It is almost like 70% of the India's retail basket. And as per our estimates, about 2.5 to 3% is going to go online by 2025. Even that 2.5 to 3% is going to be sizable for multiple large players to be in the space.
Got it. And how about the smaller players, especially those in the segment of top-up deliveries and milk runs, right? Which kind of service the small market where people are buying milk, eggs, bread, and probably some part of groceries.
Sure. That's an interesting segment, Payal. If in our consumer discussions, we've realized that the online side of e-grocery of grocery has typically been the stock up basket. Okay, they've been fairly familiar and comfortable to stock up their grocery wallet rather than going to e-grocery platforms for their weekly or daily needs. Okay. This is also in a way how some of these models are catering to the customers, the higher minimum order values or the delivery charges that are there. And hence the customers have not really moved a lot from their kirana play or from their the milkman who comes to their house. There have been such ventures which have come in the likes of BigBasket. Even BigBasket acquired a company and it is offering BB Daily service. For each of these platforms, these are early days in terms of how they are solving for the customer needs and operationally how they are able to deliver as well. However, these models will be important to be able to look at the daily top-ups and the weekly top-up use cases.
So we've also seen recently that most of them become acquisition targets. Is that the exit route which will happen for most of these services in this particular bucket, or do you think that they can grow into a full-fledged online e-grocery player by themselves?
I think the problem really needs to be solved from a unit economics perspective. And if I were to really look at the way the supply chain, the fulfillment works for such a model versus a inventory stock up play, it has to be quite different. So even if it gets acquired, this business, this will still need to have sufficient amount of independence to be run. And obviously a customer is going to be needing both services. So if a single platform is able to offer both services, it helps the platform to get more wallet share of the customer.
That was Rohan Agarwal from RedSeer. And Tech Circle's Supriya Roy spoke to Anup Jain of Orios Ventures to understand his views on the current e-grocery market in India. Let's listen in.
Hi Anup, how are you? How's the day been so far?
Hey Supriya, all good. It's all kicking back into action, as I can see everywhere, public markets, private markets, and overall activity in the economy. Some great predictions from the IMF for India this year.
Yeah, bustling out and about. We'll dive right in and we'll talk about the biggest development in the week. What is your take or what's your perspective on the whole ongoing consolidation in the online grocery space in India, particularly the startup space? More than anything, if the ecosystem's ready,
Right.
Such a consolidation at a time when the whole offline-online play is still skewed when it comes to grocery, which is otherwise a very large part of the retail basket in an offline world compared to fashion, electronics.
Yeah. Look, the moment anything crosses $1 billion in valuation, i.e., it means that companies acquire unicorn status, it starts to attract attention for consolidation. And obviously, winners emerging at this level of valuations, and therefore the underlying business volume being significant, it basically dries up funding for any Me Too businesses, right? Which must be or startups or new startups which are basically trying to enter the same space. So one finds therefore consolidation as the perfect exercise to happen. It can come in from the existing investors, like we saw in the case of e-commerce. We saw it in the case of the taxi aggregators. And we saw it in the case of the e-pharmacy space as well. So in the e-grocery space also, the same phenomenon has happened. And we are seeing, biggies emerge of that scale. And therefore, this being a $500 billion industry, the conversion to e-grocery more and more from where it is today, especially post-COVID, is undoubtedly inevitable. The other, I think, driving factor has also been that some of the investors in some of the biggies in this industry, as also in other industries, may potentially see an exit for themselves, having invested in these companies 4 or 5 years back, as many of these are financial investors and they start reaching the end of their fund lives, over a period of 5 to 7 years. And that drives a bit of fair amount of consolidation. There are secondary shares available from the existing investors, earlier investors. There's also, I think, some of the Chinese investors we're hearing have also decided to pare their holdings or take an exit, given the entire scenario around their investments is uncertain, as has been for the last, sort of 1 year and a half. So that may have also prompted some of this consolidation from a sell side to provide an exit to existing investors.
Great. On that same end of the investors, and I want to know from your investor side of looking at it all, do you still think there are white spaces left in the sector for newer, younger startups to emerge or make a space for themselves out of? Or is this going to be a 2 or 3 horses game now that, you see such mega players? I mean, there's so many variety. There are these apps right now it's not even horizontal players. Now the new term is super apps. So you see Tata or Amazon or Flipkart trying to be super apps, or even Google for that matter in India. And then you also see players like BigBasket or Grow First. And then you also see players like these community startup, agri-tech and grocery sort of a mix. So there's a wide range when it comes to catering to that retail, the grocery bit of the retail basket for the Indian consumer.
Typically in any market, you will find that the largest player has, 30 to 40% market share. And then the other players, pretty much divide up the market. And then there is unorganized or niche players. So in this case of, retail, the niche of the unorganized is basically the traditional kirana. You've got the mid-size grocery stores, which will become organized under technology and will become omni-channel. And some of the concepts, that are working in this area are, for example, Gully Network. Then in the top end, the large format chain stores like the Spencer's, Nature Basket, etc., they will have to really, focus on the upper income consumers and indeed offer them omni-channel experiences as well, and their SKUs will look very different from the popular large format stores like Big Bazaars. And the e-grocery players will certainly be divided between premium players for upper income consumers and popular players for the average consumer.
Okay, perfect. That sums so well. So thank you so much for your time and for sharing your thoughts with us.
Thank you, Supriya. It was a pleasure talking to you again.
All right, moving on. India's own Twitter, coup, has gained some popularity over the last couple of weeks after Twitter got into some trouble with government over banning certain accounts. And several celebrities and government officials have also joined the app and promoting it as a made in India alternative to Twitter. And to discuss this further, we have Shubham Sharma joining us from Tech Circle Newsroom. Hi, Shubham. So you tried your hands on the app. So give us a bit more about it. What's the app like? Do you think it will give a tough competition to Twitter?
Hi, Shweta. So I tried out the app but it doesn't look like an original product. It looks like a ripoff. So when you make an app as an alternative to something, you are not supposed to make a replica. It has to have some original elements. When I tried out Koo, all I was reminded of was Twitter. The profile page, the main feed, the resharing process, even the logo of the application, which is a
Yeah.
bird, by the way. Yeah, so it bears resemblance to that of Twitter. It's almost as if someone has copied their classmates' homework and made some modification just to ensure that they don't get caught. So basically, that's it.
Yeah. And what do you think is really missing from Koo at present?
In my opinion, the interface and experience of the app needs a lot of work. It has to stand out from Twitter to make its own space in this category, the microblogging segment. On top of that, additional improvements and features, maybe like more local language support and better sorting of hashtags, which is right now a mess, would be great.
And anything that Koo is doing better than Twitter, which you think?
Better than Twitter, I would say the content aspect of content aspect is better than Twitter. So we have the 400 character limit for creating a post, which they call Koo. So Twitter offers a 250 character limit, while Koo gives you 400 characters. On top of that, you also get the option to create a minute-long video or audio segment, which is great, by the way. Plus, Koo also offers the option to edit shared posts, which Twitter users have long been asking for. However, one has to remember that a post cannot be edited once it has received a like or comment from another user. Edited posts come with original timestamps and do not have any visual cues indicating that they have been modified by another user. So that's that.
Okay. And are there also any ads on the app?
At present, Koo does not have any ads, but moving ahead, it is likely to introduce advertising because that is the only source of revenue that the app can opt for right now. Twitter also follows ad-based revenue. So yeah.
All right. Now it remains to be seen whether Koo's desi edge will gain over Twitter's monopolized market in the country. Well, with that, it's an end at this episode of Tech This Week. Do stay tuned in and logged on to techcircle.in for more interesting news and updates. Thank you very much for listening.